Today we're going to be going over a new fractional real estate investment platform called Tirios. Oh, what's up, YouTube? It's Joe Catchpolia sitting on the couch making some money investing in fractional real estate online, as usual. I say it's new. This is new to the channel. It's not a brand new platform. It looks like they've bought properties at least as far back as 2023, so 3 years ago. When somebody brought this platform up before in the Discord, and at the time it looked like you could only invest if you were an accredited investor, and so because that's not most of the people in our community, I didn't bother to cover it. I've been getting their ads, so I took another look at them recently, and it appears that you no longer have to be an accredited investor to invest on there. Looks like it's going to be open to anybody. I could be wrong about that. I went through the terms of service and the privacy policy and everything that I could find, and it does seem like that they're just going to let you buy. I didn't actually go through and purchase someone. This is going to be my first impressions video. I'm going to dig into one of the properties a little bit, but I don't know. There's a lot that I like about this platform. Obviously, brand new to it, so don't take that as you should just jump on and start buying stuff. I do have some complaints. One of the things, so you can see they've had several listings. I can't open any of these ones that were closed. So if they've sold out already, I can't open them. The only ones I can get into are these ones that have been, that still have some ability to invest in. This is one that I was just taking a look at this morning. I like, they give you a lot of good details about these properties. You've got all your physical characteristics. They give you this is a marketing video. It's not. I was hoping it was going to be a walkthrough video of the property. They show you, okay, if you invest $100, this is what we expect that to look like. You can see $100, 3.25. So they're saying cash on cash yield, 3.25% in year one. And then you can see it goes down in year 2 and 3, and then comes back. I believe this is because they have a short interest only period the first year. So that's something I don't love that, right? I don't like when you've got this sort of teaser rate, like, oh, it looks good at first. This is very low yield overall though, right? Like 3.25% is one of the lowest advertised yields we've seen anywhere. 2.27 in year 2. We haven't seen that on any platform that I can think of. So, appreciation is doing a lot of the work in their deals. I'm going to talk a little bit about their market that they've chosen. So I think that it makes some sense. These pictures, I believe, so this property is I think it was built by Lennar, and these just appear to be Lennar's marketing photos. If you're familiar with their platform or their properties and offerings, that's what this looks like to me. I don't think this is this particular property. And then okay, you can open. They give you all this details, characteristics of the asset. Nice, right? You can see beds, bath, size, lot size, who's the builder, when it was built, and okay, look at this, 2023. So this is important, right? Like this has been owned for this has been in existence for 3 years. I'm gonna, it looks like I pulled up the public records. It looks like Tirios. I hope I'm saying it right. Propco Tirios LLC bought it, 3 years ago, right? So one of the things that I'm a little bit concerned about is, when we looked at the, this investment summary, it just says year 1, year 2, year 3. So is this, I wish they put actual years here, right? Because if I'm making an investment in this property now, is this based on when they bought the property, right? Is this year 1 like really just like 2023, or is this just now being listed? I couldn't find like the like an offering circular or anything like that. They mention being SEC regulated, but I didn't see any, like the offering circular. So I'm not, so figuring out the timing is a little bit difficult, right? Because like this makes me think, okay, I'm investing my $100 today. Next year is when I'm going to earn this. But if they actually bought this asset 3 years ago, in that year, their year one was here, but then that would mean, okay, are we back to here? Are we going to be at 3.3? I don't know. And so that's, whenever there's outstanding questions like that, it worries me a little bit. Okay, I sure do the characteristics. The comps, this is nice. They actually give you the appraisal. And this, again, was done back in 2023. But I love that we have a real appraisal, right? I think that's extremely helpful. They give you the photos. Again, I don't think these are necessarily photos of our specific property. Maybe this one is, but I think these are probably just the marketing photos that Lennar uses. Is this that same marketing video? I think it is. Yeah. So, but then, they give you a little map, where it is. So I don't know if you're familiar with this area. This is actually not too far from me. I'm down here in San Antonio. This area between Austin and San Antonio, a lot of people refer to this as the I-35 corridor because you can see Interstate 35 right there. This is one of the fastest growing parts of Texas, and really one of the fastest growing parts of the country. A lot of times, New Braunfels and San Marcos, and they're always on the list of fastest growing places. There's this theory that gets floated around on the internet quite a bit that at some point Austin and San Antonio will be thought of the same way that Dallas and Fort Worth is, right? That they're going to be just one mega city versus two separate markets, because we currently have two separate MSAs. Now we have, I think, 60 more miles between our downtowns than they have between theirs. So I think that's a little bit of a stretch to believe we're ever going to just really be one big city like they are. Even though they're not, Dallas and Fort Worth is two distinct cities, but most people think of it as DFW, that whole area and market. And if that were to ever happen, it happens by, this area in the middle, this I-35 corridor being built out more. Because this theory exists and because there's such fast growth, this is an area that's just had tons and tons of investor demand as long as I've been in real estate. So I heard about New Braunfels and, being a fast-growing market for the first time when I was in graduate school for land economics and real estate back in 2025. I mean, 2025, back in 2005. So, 21 years ago is the first time that was sort of on my radar that, hey, that's a market that's growing fast. And it still is. So, and I focus on New Braunfels because that actually gets picked up in my market. San Marcos is like the first main city that's outside of where I would, I hardly ever go up that far. And so don't really sell stuff over there. Do seem to have a little bit of MLS access in this area. There's like sort of some different competing MLSs. So I don't love the data that I have. I think I'm not picking up everything, especially on the rental side, but it seems like there's some issues there. But so I like this market, and this is, if you look at the properties that they have available, they're basically all right here. There's some in Kyle, there's some in Maxwell, there's some in San Marcos. So they've picked an area, that I'd expect to do really well long term. And so this is the San Marcos, data. Yeah, it's not a huge city, but you can see unbelievable growth, right? 20%, 29%, 50% population growth. But you can also see, that home prices have gone down over the last year, and we've had this sort of pretty, continued decline. This is a much worse looking trend than when we look at this trend line in a lot of other markets. And it's partially because of this, right? You can see prices just basically went straight up from 2020 to 2022. I mean, it was an insane time to be in that area. So I think, prices just got way ahead of themselves. There's tons of new builds over there. So even though the population's growing, there's also, growing supply. I actually pulled up this is the specific zip code that property's in, and it looks kind of the same, maybe a little flatter decline, but you can see actually that last year it went down further than San Marcos on average. So I like the area that they've picked overall, but I think recently it's sort of suffered, especially, if they bought this asset in 2023, right? Oh, let's look at the zip code we're in. They bought it around here. We've had quite a bit of decline since then. And it looks like we're buying into it at the same price that they bought it for. So that's not great for us at all. Let's see, I already looked at the comps, already looked at those. I love photos of the actual property, so that's some stuff that we're missing. The neighborhood map. I mean, these, we're not getting a ton of detail there. I like this user interface, but I would like, if we got real photos, we got, I actually like some of that detail. So I think they're doing a good job overall of sort of what they're providing us. Their pro forma, again, I think they do a good job of breaking down the numbers for us. What I would have liked to see, and I couldn't find anywhere, some of the other documents, right? Like as far as, well, just if there is an offering circular, like that's the one thing I really want to see. But also too, the appraisal was good. But yeah, I'd like to see the contract, or I guess I'd get to see the subscription agreement if I purchase something. But let's see. Yeah, they've got this monthly rent growth. Yeah, 5% rent growth seems like a real strong assumption. I like that they're using a 5% vacancy rate. I think that's it's good to see that they're using a vacancy rate, because some of the platforms, you can see that they're not. But when I pulled up data for rentals in this area, this was one of my big concerns. So you can see, this is a Lennar property. My team sells a lot of Lennar homes to investors, but over the last 12 months, we've started to run into a problem where a lot of the communities have sold tons of properties to investors, and finding the right ones that you can still rent fast, quickly, has gotten tougher. And so, 5% vacancy when you have, pretty slow turnover. Like once somebody's left, the average days on market for a new lease has been, some of the rental listings in that market have been up for a very long time. So I guess that's a long-winded way of saying maybe they need to have a bigger vacancy rate. That's something that on each of these properties I would dig into a little bit more. I'm not doing a full due diligence on this property. I just am giving you some thoughts as I'm looking through here. I like that the leverage isn't super high, right? 62%. This seems crazy to me. This 9.99% year one interest only, or 1 year of interest only, right? So that's good, and that's why that first year has higher cash flow. But 9.99% is a crazy high rate, but it's because of when it was done, right? I mean, I'm assuming this is when they purchased it in 2023. That's probably around when rates peaked. So maybe there's some opportunity to refinance. We'll see. But I don't love that. They break down. Okay, I like that they have a 5% repair reserve on this, right? So it's $20,000 for a single family home. Pretty good. Closing costs not crazy. I think, yeah, and purchase and sale agreement, title insurance, and this seems like a pretty high closing costs. I would guess some of that has to do with, setting up the entity, financing closing costs. That's just for the mortgage. They charge a 5% fee. They're also managing the property, And I think they charge, what is it, like $59 a month as their management fee, which seems crazy cheap. Yeah, so total investment, and I have my little, I don't think you guys see that, but I have that little bubble that gets in the way when I'm recording. Yeah, so total investment. So I like how they break this out for you. And they actually, and they give you good details as far as like, okay, this is all the expenses, debt, break it down as debt and equity. This rental revenue, this represents, I think, like $1,775 a month, something like that. When I looked at the average rent in the zip code, it's right in line with that. But when I pulled up rents, I pulled up rents in my MLS, and I'm not going to share that because I don't actually think I'm supposed to share MLS data in this market, unless except for with my actual clients. So not gonna share that. But it looked like most of the ones that actually rented this year were at like $1,550, and we have seen in my market rents decline a little bit over the past couple of years. So that's one thing, because and partially because they just shot straight up again, just like how prices did. It's not across the whole market. I mean, there's certain neighborhoods, but a lot of the ones like this, that's the case. So I don't know how realistic that number is. But one of the things that really bothers me is, okay, they've owned this property since 2023. Why don't we have any historic data? Like, I'd like to see, okay, this is a nice pro forma. What's it doing now, right? And if they put this pro forma together in 2023, are they hitting these numbers? I think they've got their property tax moving up along at a rate of what they think the appreciation rates should be, which again, the appreciation is what's doing most of the work in their returns. They have a crazy low repair and maintenance number, but I think that they're doing this because they're basically saying, okay, we have that $20K repair and maintenance reserve. We're sort of just spending that down over time. I don't love that way of doing things, but as long as your math still works at the end of the day, I'm okay with it. I don't like to get towards the end of the hold period and not have that cash though. So, that does seem like a little bit unrealistic, but I think it's because they're expecting to just spend down out of the reserve. When I did the math on this cash flow, that's one of the things I like to check. How did this actually get you to that 3.25? So it makes sense from that perspective. I wanted to see, our NOI. Oh, look at that. Even too, the NOI goes down. So it's not just because. And they actually are showing your interest. What else is going on here? Oh, no asset management fee the first year. So that's partially why the NOI goes down. So it's not just about the interest, 1 year of interest only. The property tax also goes up, and they don't put any vacancy until future years. Okay, so that kind of makes sense. They're like, oh, your first year is going to be more perfect than the rest. I mean, it only makes sense if they were buying it. I mean, there still should be some vacancy the first year. You're not buying it from the builder with a tenant in place, so you still have to list it. I don't know. That's kind of interesting to me. But again, they should have actual numbers at this point. They've owned this property for a while. We should be able to know, okay, I'm not in year one. I'm in March of 2026. What did my last 12 months look like? What does it look like right now? They should have that data. I don't see why you wouldn't give it to me as a buyer of this stuff right now, right? I guess. Because this is a much different situation than like on Mogul, where we have a property under contract to be purchased, and all we can do is have a pro forma. Here, again, it looks like this property has been owned by Tirios Propco since May of 2023. So yeah, I don't like that at all, that we're not given any of that data. I like they've provided this cap table, which it makes it really clear. Okay, you've got your debt, you've got your equity, you've got what each token is valued at, and then they're showing, okay, Tirios is holding 60 tokens, and then the rest are going to be sold. I actually love this, that the platform is holding a certain number of tokens. They're holding some tokens. They're also the ones managing it. So there's some skin in the game on the platform side. This isn't like a Lofty or somewhere where they're not where they're just acting as a marketplace. It's also not like some of the ones like Arrived, where they're just selling it all out and sticking around as a manager. I mean, they're actually still holding tokens, and so I just think I like this model a lot, that they're doing that. And then so that gets us. This is the all investors, and then the lender and the investors. That's where the money comes from that goes into here. So I like that they provide this. I think that's helpful. What is this summary? I forgot. I know I took a look at this. I don't love when you have these sites where like every page takes a while to load. It's not usually this slow. When I have my screen recorder, it makes it worse. Oh yeah, and then this just gives you like, okay, if I put in, this is basically the same summary as what we saw under the assets. And then let's see. This really bothered me, right? There's no documents in the documents tab for this. Like, I would like to see if there's an offering circular for this. That would be helpful, but there wasn't. I'd also again, it's a property that they've been operating for almost 3 years now. I'd like to see past financials. Why wouldn't you give me that if you're trying to sell me an investment that you're running? They have pretty good FAQs. Their mission is to democratize real estate investing. I hate this term at this point. We see this all over the place. I don't know. It just it's just kind of funny. It's overused at this point, and that's what they're most of these platforms are saying they're trying to do. And I don't really necessarily think that is what they're trying to do, because this is one where you're giving me the ability to invest in it, but it is one where, we're not really controlling much. You talk about, okay, where do they manage and buy? They're in the greater Austin market. Really, it looks like just San Marcos in general, but yeah, people think of that as the Austin market. I'm just going to jump into a couple of these. Yeah, who is leasing it, right? They manage it, right? They're doing the leasing. They're using AI, so they're leaning into that, right? They do the tenant screening and maintenance and all the operations. So I really like this. I think that they are not using a third-party manager. They are the management company. So they're trying to build out something where their systems and processes are adding value to us as investors. Keep in mind, they could also be subtracting value from us as investors, right? This reminds me, before I forget, please like and subscribe. In the description of this video, I have links to all the places where I'm currently invested in fractional real estate online. Please do your own due diligence on all of these platforms, right? Just because I provide a link or I tell you I invested in something or I'm talking about a particular property, it doesn't mean that you should invest in it. It means that, I'm sharing the way I think about it, what my impressions, my strategies, what I'm doing, my results, but you want to do your own due diligence. Also, in the description of this video, I have a link to the Discord channel I set up where we talk about all different fractional real estate platforms. There's a couple hundred of us in there. It's not a sales funnel. It doesn't cost you anything. If you do join, you might get DM'd by imposter accounts that look like me. Please ignore those. Please report them to Discord, and also let me know if they ever enter our server. I boot them, but somehow they know when you get in there, and then they DM you. So be careful of that. I'm never trying to sell you anything in the DMs or really anywhere, right? Like, I'm not. This is there's no place on the internet where I am reaching out to somebody else first and trying to sell them something. So just keep that in mind. Okay, so back to this. Yeah, you want, just because I like some of the stuff they're doing, you just want to make sure you're doing your own due diligence. That's what I always want to remind people of that. But yeah, I think it's a great thing that they're trying to, do their own operations. It makes them sort of like operating in the way that Collab is. Although, don't take that to mean that their performance is going to be similar. I haven't been a huge fan of Collab, although I might change my mind about that. They've sort of been paying me very regularly, so we just have to see. I just don't love the transparency and question answering there. What if there's repairs needed? What if the tenant defaults? I think that's all good. I feel like there was something else I wanted. Oh yeah, they talk about the plan holding period, 7 to 10 years. Somewhere else they talk about taxes. Did I skip over that? But they say you get a K1, which is nice. That's what I'm hoping. That's what I like. K1 for each property. Although some of the other platforms seem to be saying that you're going to get similar. You can use the same benefits with their 1099s. I just, that you're still getting the tax benefits. I'm just not completely sure I believe it yet until I go through and do all my taxes. They do mention that it is a blockchain. Your ownership is listed on the blockchain. I didn't find what blockchain it's on, but they also tell you, but if that doesn't work, we'll just migrate it to another one. They're not guaranteed. How do they choose which properties? They talk about their AI software again. I don't love this. I did want to talk. I'm going to talk about their properties choices just a little bit. I just want to make sure. Yeah, so that's everything that they give you. Overall, I like this UI. I think they're giving you a lot of good data. I'd like them to give you a lot more. Bonus offers, right? So when you first sign in, you get this, okay, if I invest $100, I get $20 cash bonus. So it's like 20% bonus on your initial investment within 45 days of opening an account. So, again, I talk about this quite a bit, right? If you're on the fence about a certain deal, maybe it looks like a good investment, maybe it doesn't. Well, getting an extra 20% seems huge to me, right? Like that can all of a sudden make this mediocre deal look fantastic. We'll add the bonus within 15 days based on your total investment during the 45 days. So, whatever you invest that first 45 days, that's kind of interesting. But so, okay, I wanted to mention a little bit about the properties that they've picked. One of the things, all the ones that are sold out are sort of like the nicer properties that have garages. All the ones that are currently available don't have a garage. This is definitely a Lennar home. I think these all look like it. I'm actually not sure about these two. Which I think you can do perfectly fine. Yeah, okay, these are Lennars as well. Like I said, I sell a decent amount of Lennar homes, like my team does. It is, you can do perfectly fine with them. They are sort of the lowest price point builder in our market. But one of the things that I've seen that seems to me to be a trap is buying the Lennar communities are already the cheapest, then going in and buying the cheapest properties in those communities. And I think that's where you end up really running into trouble because, when you run your numbers and you look at your rent to price ratios, a lot of people aren't separating out their rentals by exactly the floor plan. And so, for example, we'll get a very similar rent with this, for this model versus the one that's similar size but has a garage. But the one with the garage will rent so much quicker, which if you think about, your days on market when you're renting is a good proxy. Like it equates to what your vacancy rate is, right? When you have turnover, a lot of vacancy is just a matter of how long it takes you to re-rent it, right? Like that's what your vacancy rate is. And so at least in my markets where I've looked at a lot of Lennar properties, most of the properties like this are actually traps for investors. They look the best from a rent to price standpoint, but they're actually underperform the ones that are a little bit more expensive but have a garage. We've also just seen that properties, tenants, when they have a garage, the more storage space you give a tenant, the longer they tend to stay on average. And it makes a lot of sense if you think about it, because if I'm going to move and I have a ton of space and I've stored lots of stuff, moving is much more daunting than if I just have really just the necessity, the minimal stuff that's just inside the home, right? So I really don't like their choices. I'd like to see them buying, I like all these earlier ones look better to me, but I can't actually click into them and see the details. But you can see the minimum investment was $1,000 then too, and now we're $100. So I wonder if these were ones when you had to be an accredited investor. I'm not really sure, but I'm just not a big fan of all these ones that don't have the garages, that are basically their cheapest models in those. Although, at least for us, we have even smaller properties than these. Like this is, it's a 3.2, and I think there's like 1,300 square feet. They're making some that are as small as like 850 that are 2.2s, 850 square feet that are 2.2s. And then even some tiny homes too, like all the way down to 350. So it's not like it's their absolute cheapest model, but it is. I just think, at least in my market, what I've seen is when you go with the slightly more expensive homes in the Lennar communities, it's still that they're still the cheapest communities, but just slightly nicer homes there. Is where we've seen investors do better, purely from a speed to fill those, re-rent them. And it just makes a big difference with your turnover, your vacancy rate. It just gets ignored. A lot of people are just like 5%, right? That's what they put in no matter what. I mean, it's clear when you see that in a pro forma that somebody didn't really do the work to figure out what does turnover look like in that market. Is it really 7%? Is it really 15%, which 15% vacancy rate sounds crazy. If you just think about every week is basically a 2%. Every week it takes you to turn over a property is roughly a 2% vacancy rate, right? That's when you do the math on it. That's not exactly. That's like if you had a 50-week year, but anyway, about 2%. So if it takes you 2 months to fill a place up, you're getting pretty close to 15% vacancy rate. Well, no, that's over, right? I mean, if you take like a month and a half, that's 12%. So somewhere in there, right? Like that's not a very long time. Sometimes in some of these neighborhoods, you'll see the average days on market be 75 days, 90 days. Which becomes really problematic. Now, maybe their marketing is just really top tier. Maybe they, that's one of the things where they are, they're invested in some of these deals. They're the ones operating it. I would hope that it's informing their choices on which of these properties to continue to buy going forward. Now, maybe they bought these ones initially and then they are making an adjustment, right? Like I don't know that for sure. But it is one of the things that I like. They're operating these, they're in that market. At the moment they've chosen one market. Hopefully they get really good at it. So I don't know. I'm pretty optimistic about this platform so far. Like I said, I haven't even made an investment on here. I think I probably will. Just buy a little piece of something, see if I get any better data. Because, like I said, I mean, I should have performance data for this, not just a pro forma, because they've owned it for so long. So, if anybody else is invested on here and you have some results that you'd like to share, love to hear about it. Put it in the comments, jump in the Discord. if you know anything else about this platform, right? Like when they switched from being, because I'm pretty sure that the first time I looked at them, you had to be an accredited investor. I'm curious when that change was made. I'm curious how they've owned some of these properties for 3 years and they're just now, has this listing been up for the last 3 years, or, have they just owned it and they're running it and they just now got to a point where they can sell these, because it was a paperwork issue. I'm really curious. And then also, I'd love to know how these ones that already closed out have done. And then again, also just how well these ones that they own, like this one that they've owned for 3 years, have been operating. How's it actually going? And how does it, compare to what their initial pro forma was? Is that pro forma for us today, or is it, looking at, okay, based on the initial purchase date? Those are all the questions that I've got. I don't know. I think that I'm relatively optimistic about it. One of the things I like, because they are an owner operator, that they're focused on one market for right now. But at the same time, I like fractional real estate because I like the diversification, right? So it'd be tough for me to just go all in on this one platform. But if you've watched me for a while, I don't think I'm going to go all in on any platform, right? And I've been working on some thoughts on what diversification in this space really looks like. Obviously, you can't get it. This is a concentrated model at the moment here, where basically everything is in the same. Or I think everything is in the same market. But I think the benefit of that is they can get really good at identifying properties in that market, running properties, their marketing for tenants, all that sort of thing. So there's some good and some bad with that, right? And if I'm just adding this as one more piece across several different platforms, well, maybe it doesn't matter that they have all that concentration in one market. I'm interrupting this video with some more of me just talking about this same thing. I'm cutting this back in at the end. Sorry about this. So I said there wasn't. I couldn't find the offering circular. I did actually find it. I don't know. There's not. I didn't read the whole thing. It's pretty long, but I wanted to point out a couple of things. One, I was just glad to see it. It is from September 30th of 2024, which is quite a while back. I really just would love to be able to find like actual recent operating performance. Seems they've just been running this whole time, right? That doesn't make a ton of sense to me. We've kind of seen this in some other ones where it's for multiple series, right? It's for, you've got the 2083 Gabbro, which is the property that I had kept talking about, but they have it for 2070, or I said 2083, 283, 274, and then the 313 Micah. I know they have other properties, so I'm not sure how those fit in. But I wanted to point out something that I thought was kind of interesting. It's a lot of the same sort of stuff that we've seen in like the Arrived Homes ones and Real Bricks and whatnot. They do have this maximum interest in the series, right, that you can have by an investor so you can't buy more than 19.9% of it. But there was some interesting things when we got to I'm going to have a hard time finding it again. When we got to the section on how it was financed, all these risk factors. I mean, obviously, if you're going to invest on this platform, you want to read all of this, right? And that's something that I'll do. And I mentioned that I'd probably invest on here. It might seem crazy, right, because of how low the yields are. And, it would be, again, just taking advantage of a 20% discount on my initial investment, right? Like it seems hard to get really hurt when you're starting with a discount like that. Where is this financing section that I wanted to show you, though? Suitability required. I mean, there is just a ton of info on here. Yeah, there was a little blockchain section. Yeah, none of this is that. Brokerage commissions. Nope, this isn't it. Well, this is embarrassing. Let me see. Here we go. This is the interesting part. And I mean, obviously, I think all of it is stuff that you should read. But it's okay. Loan terms, right? This property was financed at acquisition with short-term debt, the loan amount, and an interest rate of 9.99%. Short-term loan, and it was just much, so interest only. It said interest only 1 year. It actually just was a 1 year term, and then it's been refinanced. The short-term debt was refinanced May 31st, 2024. But this refinance with the long-term debt and this interest rate isn't what was mentioned. Where did we go there? Okay, well, did I close it? I probably closed it because, here we go. Yep, you can see I'm making my thumbnail for that. See, I went back and did this. I realized I had found it. Let's see. Here we go. When we look at this property, yep, you got a little sneak peek behind the scenes there, right? I am someone who uses Canva and not very well. Here, this is the interest rate they mentioned. Like, why are they telling us this when, nope, don't do that. There we go. When clearly, like, this was refinanced into this other loan, like, a long time ago. Stuff like this drives me crazy, right? Like, I don't understand. And I don't think the website I don't think that listing has just been up there that long. So I don't really understand. Like, they should know about this debt, right? I mean, this has been in existence for a couple years if this was refinanced in 2024. And you can see, okay, what improvements that they did? None. There were some minor touch-ups. It's funny they said none, and then, these were covered by the builder. Okay. And then, original estimate range for that rental rate. But again, like, I'd love to know what is actually being rented for right now. It was rented for $1,875 initially, which is higher than what was estimated in the pro forma. But I'd like to know, well, what's the lease rate now, right? Again, I mean, this is 2026. How do we not have the info over the last couple of years if they are, if this is currently listed, if I'm buying this right now, right, on their website, like, how hard would it be? You don't have to update it every day, right? But, like, give me stuff that's not, give me stuff that's accurate in the last year anyway. And that's what the other thing too, like when I said, they have year 1, year 0, like, put actual years here. Seems we know when the acquisition is. Like, I would just like to see that. I was glad to actually find the offering circular, and I'll probably dig into this, and if there's anything else pretty, very interesting about it, I'll let you know. But yeah, I mean, this is just pro forma. In the short time I looked at this since I found it, I didn't find anything too interesting other than that. But if you've dug into this circular more, I'm curious if you saw anything. Obviously, I'm going to do more videos about this platform in the future. I just didn't want to publish this, my first part of this without sharing this, because I realized I did find the circular, and it was, I didn't want to put out a video that said there's no offering circular to be found when, here we go, we've got one. Anyway, that's all I've got to say about this for today. Like I said, if you do have some thoughts or experience with this one, please do share it. Otherwise, until next time, I'm just going to keep making mistakes so that you don't have to.